Okay, good. So I said, essentially as a trader, you are either looking for an opportunity to buy or you are looking out for an opportunity to sell. And then when you are buying, what are you trying to do? You are anticipating that price is going to go up, all right? So essentially, if you are open to buy, you are anticipating that what there will be an increase in price, okay? And on the other hand, when you're selling, you're anticipating that what there will be a decrease in price. Basic economics now, if you are open to buy, right, you want to buy a commodity with the hope that when the price goes up or that the price is going to go up and increase in value, what are you likely to do? I think the most important thing you want to look out for is to buy when the price is low. You are open to buy when the price is low, right? You are open to buy when the price is low. On the other hand, when you are trying to sell, you are open to sell when the price is at a high point. So this will bring me into some of the technical things we'll be talking about. The most fundamental, the most important technical you want to be looking out for on every chart. And this is the foundation upon which every other technical instrument is built, is support and resistance. All right, so your support and resistance. So for an example, if you come over to a chart like this, I want you to see your support levels as your floor. Wherever you are right now, the floor that is holding you, right, the floor on which you're standing, you can see that as a support. And then the ceiling above you, you can see that as what? Your resistance. If you see someone who is maybe in a two-story building, let me use that as an example, there's definitely going to be a ground floor, right? There's going to be a ground floor. And then for the ground floor, the decking of the first floor becomes like the roof for the guy on the ground floor. Please stay with me, try to understand. Let me try and see if I can picture or put a drawing to that so you can get what I'm saying. This is an imaginary two-story building that I'm drawing right here. So this is the ground floor. And then this is the decking of the first floor, right? And then this becomes a ceiling for this guy here. And then you have this, right? So this is floor one. I hope I'm communicating. So if we call this the first floor, and then we'll call this the second floor. All right, so, and then this is the ground floor. So this place marks what? This is for someone who is inside this place, inside the ground floor. If you are in the ground floor, this is your floor. Let's call this your support level. And then this is your resistance point. Let's call that your own ceiling, because what? You are on the ground floor. What happens for someone who is now in the first floor? It means the ceiling of this guy on the ground floor becomes a floor for this guy, becomes his own support. Try to understand my illustration. Here, it's a resistance for this guy. It's a resistance for this guy. This place is a resistance for this guy. That's his own ceiling. But for this guy, it's a support, okay? On the other hand, for this guy, the floor of the guy on the second floor is his own what? Ceiling. But let's call that what? His own resistance. And on the other hand, what do we have here? We have the floor is still what? The support for this guy. And then the roof acts as what for the guy on the second floor? That's now his own resistance point. As basic as this, try to understand the floor on which you are, the floor on which price is. When price gets to a floor, We call that a support level. And what's the expectation of a support level? What you're expecting is that from that point, that's the low point that price has gotten to, and you're expecting price to go up. Let me draw this out so you can. I'm going to clear this now and then draw a basic illustration of a support and resistance level right now. So look at this. This is Euro JPY chart today. I'm on the daily time frame. I'm marking the first level. I'm marking from the tip of the body of the candle, right? I'm leaving the wicks out. We'll talk about that when we get to price action. But I'm marking this from the body of this particular level. This is what the support, this is a support level. This is the floor level. Then what do we have here? Price pushed, and then this support, when price moved from here, where did price get to and then make a pause? Price got to this point. You can see this point. So let's call this a ceiling level for price here. So I'm still going to move it to the tip of the body. All right. I'm still going to move this to the tip of the body. Right. And then what do we see price doing here? When price got to this level, if you want to know how relevant the level you have drawn is, sometimes you have to drag them to the past, drag them into the future. And you can see how price reacted to this level. This was a level at a point in time. Now this is the same repeated level. Then what did price do? Price got to this level, which was, picked up from this point. And what did price do? Try to understand. It may seem complex, I know, but try to understand that what happened again when price got to this point. And don't forget, this is a resistance level. Now, this is a resistance level. This is a support level. When price got here, what did price do? Price pushed back again and then created what? Another level here. A new support level was created here. So support, what I'm trying to say in essence is that, let me finish this illustration. I'm going to take questions. I know there will be questions from this one. Then eventually what happened? What did price do? Price eventually pushed above this support level, right? I mean above this resistance level, sorry. Above this resistance level. Price eventually pushed above this resistance point. And then when the pullback was to come, the resistance point, right? Just like the case of the story building I was talking about, where price breaks above a ceiling. So the ceiling of the guy on the ground floor is what? The floor of the guy on the first floor. I hope I've not lost you. All right, so this resistance point got broken. And then what happened? Price pushed down and then it became what? The support point. It became a support point. And what has price done? When price got back to this support, what did it do? Started going up again. Now, this should start giving you a level of understanding of something in your expectation for the next thing that price will do. In your expectation, as you're trying to expect the next action that price will take, where do you think the next stop is going to be? Because obviously a level has been created here. I'm dragging from the body, from the tip of the body of this handle. All right. So I'm going to drag it into the past. Let's see how relevant this level was in the past. And you're going to see how relevant the lesson of support and resistance is actually. You can see what happened in the past when you drag it. This is how you know if you have drawn the right support and resistance level. You look at them, because in trading, we believe that what has happened before is actually going to repeat itself. So we're trading on the premise that what? history is going to repeat itself. That's why I said yesterday that we are technical traders, okay? We are working with the history of the chart to determine what is going to happen in the future. So that said, who understands? If you understand what I've said to this point, can you drop a 1 in the chat session, please? You understand the things I've said to this point? Can you please drop a 1 in the chat? If you understand, oh great, great, oh great, 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 great. Okay, no pressures now. If you don't understand, can you drop a 2 in the chat, please? I don't get what you're saying. Please drop a 2 in the chat session. All right. It seems everyone is able to get this. I'm excited about that. Oh, great, great, great. Those on YouTube also are following very well, and that's exciting to me. A second, please. Okay, good. So let's make more progress now. So try to understand fundamentally when you open up a chart, the first thing you are looking out for should always be your support and resistance level. Okay, your support, your resistance level. My expectation henceforth, looking at this chart, is going to be that what when price gets to this point, and if price creates a bearish candlestick or a bearish price action, what do? You can take the sell and be confident that what price is going to come back to this level. All right. So this is how you are able to start knowing, okay, when I enter the market at a certain level, where am I going to put my take profit? Where am I going to put my stop loss? It's by the knowledge of support and resistance, or what we call price levels, that you'll be able to determine all of these things. So once again, I'm going to re-illustrate this for the sake of those who didn't catch it at the first time. Let me clear this chart up so we draw a new one entirely. You can suggest a pair you are looking at already, so I can just mark them out, not using my regular GBP JPY or Euro JPY. Anyone got a suggestion over there? Okay, good. So let's take Euro JPY in the absence of none. And then I want to look at when you open up a chart and then you are trying to find your support and resistance levels. How do you go about that? Ideally, you move the chart because you need the information from the past, right, to help you for the future. But where you actually make money is in the future, okay? So you don't make money in the past, but you need the knowledge of the charts in the past, right, to be able to position yourself and know what actions to take in the future. So looking at this right now, if I want to trade Euro JPY today, right now, today, what's the first thing I want to do? On the daily time frame, I come out, I can mark out my levels. I'm using a longer horizontal line now. Why I tried to use a shorter line the other time was so that I don't bring in too many complexities. When I draw this line, sometimes you start focusing too much into the past, all right, which you are not going to make money from the past. It's okay when you are backtesting or trying to look at what price has done before. But if you are looking to trade for the day, you are looking out for the money spot for the day, it's always better off to just try not to go too deep into the past, okay? So if I stay here for an example, and then I have a mindset, all the charts, or everything I'm considering right now is just within this level. All the things I'm considering right now is within this box, okay? I'm not going to be considering things from things deeper than or further than this, I'm going to be considering just from this point on. Why? Because I'm looking out to make, how many pips are you trying to catch at the end of the day? Maybe 40, 50. You're looking out to catch, just a short trade for the day. Because personally, I'm a day trader, and I know most of the people who retail trade are also day traders. So there's no point trying to go into deep history like you want to catch 1,000 pips on one trade. It's a waste of your time. So good. On the daily time frame for Euro JPY, so where are we expecting price to get to now? Where are you expecting price to get to? It should be this point, because why? Following the same analogy, I'm going to talk about market structure now, so you know why I'm expecting price to get to that point. We have picked the floor as this level. We have this level. Then price pushed up, came back here. This is the new support point, right? This is the new support point for price. And then we're expecting this place to now act as what? A resistance. So does it mean that every time I see price at a resistance, I'm going to sell? Or every time I see price at a support, I'm going to buy? No. I'm going to show you in a minute how to look out for, am I to buy on this trade, or am I to focus on selling? We're going to see that shortly now. So I've talked about support and resistance. Let me quickly talk about demand and supply levels. And so you see how they complement each other. When we are marking out support and resistance, at the end of the day, we're only trying to mark out exact price points. If you look at this level that I'm trying to mark out right now, it shows that price is at what? 124.453. 124.453. If you look at this other level, let me mark that one with black. This other level that we marked out, it shows that what price is at 122.960. That's the exact support and resistance point right over here. And then on this one, we'll have it as what? 121.713. But in reality, price is not a particular point. Try to understand this. In reality, price is not a particular exact point. Price is usually in a range. And I'm going to use this to try and illustrate that. So if you've been following me for a while and you see how I try to mark out charts from time to time, you know that I use shapes like this. It's just the rectangle tool over here on your trading view. You can always pick this rectangle tool and use it to mark out the range for price. Because in reality, price is usually a range. You can't neglect certain weeks or or levels or areas. So in this now, for an example, instead of marking out just one zone, just one level, one point, here we're marking out between 123.050 and 122.923. So you can say that your demand level is also referred to as what? Your support. But now the difference is that it's a range of price, not an exact price point. While your supply level is the same thing as your resistance, and in reality also is not an exact level, it's a range of price. You will see the application more in a minute. Okay, you'll see more of the application in a minute. All right, so for and for here at this level, so we're still marking, no doubt, from the tip of the body, but we'll just take up more weeks, at least to fill up a range, because in reality, price is always in a range. So if I have this right now, there is a demand level, the base is a demand level. At this point, this level acted as a demand level, no doubt, but it was broken. And then when price came back, it became, so at this point, let me write this here. Here it's a demand level, and here it's a what? Supply level. Oh, sorry, it's a supply level here. That's a resistance here. It's a resistance or supply level here. But at this point, what's he acting at? Is acting as a demand level. So always, another thing I want you to have at the back of your mind and understand perfectly is the fact that price is always moving. There would always be movement. So expect demand and supply levels to be broken in the direction of momentum. If possible, you need to write that down, right? Expect support and resistance levels or demand and supply levels to be broken in the direction of momentum. So how do I anticipate that? Yes, if price gets to this demand level, will it hold? Will it break? Right? Just look out for the direction of momentum. When you understand the direction of momentum, you would know where price is actually heading to. And then all you are doing is what you are riding with price from where it is to where it is going to. Be it buy or sell, you are not concerned whether it's going up or going down. Yours is your ability to take the right position based on your technical study and then be able to take a trade. Now, in bringing it home, creating an easier way to apply this, the market can only move in three directions. So I'm talking about market structure now. Price in the market can only move in three directions. There's no alternative direction, no other way to it. Okay? Let me use this. There's no other way to it. There's nothing else that can happen for price. What are these three directions? And I've said that what you as a trader, you are only looking out for two things. You are looking for either an opportunity to buy or to sell. But the price market on the other hand can either move in the upward direction. It could be downward. And the last one is consolidation. So either there's an uptrend, a downtrend. I think it's better to call them trend. Is either an uptrend, a downtrend, or consolidation. So these are the only three things that can happen in the market. So in an uptrend, what do you want to focus on? You want to focus on buying. So in an uptrend, you are expecting that what resistance levels will be breaking and they will be changing over to support levels. Because why? The market is generally moving in an uptrend. How do I identify when price is moving in an uptrend? You'll be seeing stuff like this. I've extensively talked about this in my book, 7 Secrets to Profitable Forex Trading. Okay, so it will be very handy for anyone who is trying to understand all these theoreticals. So when price is creating, because price, even though price is going up, it won't always move in one. It's not unidirectional. It won't be a unidirectional movement. Okay, price moves. It will be, we call this impulse. Price moves by impulse and retracement. So let me call this the impulse. Then let's call this the retracement. I hope you get this. If possible, draw them down in your own book. It will help you. So these are retracement points. All these ones I'm trying to bring out. These are retracement levels. And this impulse, 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 impulse. If you still you're following me to this very point, I've not lost you in a way. Can I please get a 2 from you this time around? I want to see you type a 2. You know, I've not lost you in a way. Can I get a 2 from you? Oh, nice. So, but if you are uncertain, like you're unsure, maybe you are getting it all. Can I get 2.5 from you? Let me know. 2.5. Okay, perfect. I think I'm a good teacher. Okay, okay, good, good, good. All right, so 2.5. Okay, good. All right. So now let me take this again. Market structures, uptrend. Well, the market is either in an uptrend, a downtrend, and the last one is what? Consolidation, right? So either of these three movements is what you always have at every point in time. Either of these three is what you would always have at every point in time. So in an uptrend, you would experience, we're going to look over it on the chart. This is the kind of movement you will see. All right. And don't forget, don't throw away the knowledge of support and resistance. Okay. What can you call this level? There are so many things you can. Firstly, is a support level, right? On the other hand, you can say this is what your low. This is the low, the lowest point in the market at the moment, right? And then what did price create here? It created a new high, or we can call this a resistance, or we can say what this is what a high level. This is a high level. And on the other hand, this point, right? This point is higher than this point. The new support, when price got to this resistance point and then retracement happened, right? This retracement happened. What did this retracement do for price? The retracement created a new support level. And this new support level is what is still higher than the previous low point. So this new support level is still higher than the previous low point that we had in the market. So we can call this a higher low. I will not lose you. Don't worry. So we call this a higher low, but don't forget it is still what? A support point. And what did I say happens at support points? It means price has the potential to go up, right? So you can take buy decisions at these levels. And what do you anticipate? You would anticipate that price should, at minimum, get back to this level, the previous high point, or create what we refer to as what? A higher high point. Don't get it twisted. Just a point that is higher than the previous high. All right. And then this is still, of course, a resistance level. And this is an impulse. This is an impulse. That's why I said when in a structure, you are seeing that the structure is clearly an uptrend, you want to focus on what? The buying opportunities. Because why? It has more potential to make you money than the retracements. All right. When you're trading retracements, you want to just be scalping, you want to take very little and then move on. But if you're trading what's it called? Impulses, this is where you actually get to make more from the trade. Now, what happens when price created a new higher high? Because we said price will not move in a unit direction, like it won't just be one direction all the way and keeps going up. It may go up by one candle, so excessively. Second candle follows, but there would always be a retracement. So when you see that in the market, that price is just going brrr, no stopping, no retracement, no nothing, it's an abnormal situation. All right. Except you started riding from the beginning. That's fine. But if you are not riding in it, just wait. Wait for an ideal situation because don't forget, you are a technical trader. All right. So always see yourself as that. Then what did we say happened here? At this retracement point, the new retracement, guess what? This now becomes, price comes back to this level, right? Which was the high point we had initially. Price retraces back to this level, then we can call this what? A higher low point also. And don't forget, it is still a support level. It is still a support level. All right. You can see how price would always retrace to this level. It's now what? A higher low point. Then we'll have another impulse. So when you continue, how do you confirm that what price is in an uptrend? Once you are able to spot two higher highs, successive higher highs, once you're able to spot this pattern, right? Once you're able to spot this pattern, two successive higher highs, you already understand that what price is trending to the upside. Okay, on and on like that. You have a higher low, then you have your what higher high. At this peak point, sometimes what do you see price do? Price does something like this, comes here. Sorry. Price could do something like this, not creating a new high, neither is it creating a new low. Price is just ranging at the level. What do we refer to this? This is your typical consolidation. Okay, price is consolidating when you see something like this. I said in an uptrend, you focus on buying opportunities. What should be your focus in a consolidation, in a consolidating market? Is either you ignore it if you don't have the skill yet, you ignore it or don't trade it, or you keep focusing on the momentum that led price to that consolidation. So if price got to this consolidation, to this point with an uptrend, the only opportunities you want to be scalping will be the buying opportunities. The buying opportunities, because you are still what? The market hasn't created a new low point. So you still want to maintain the bias of the uptrend. Don't worry, when I go over to a chart, it will be more easier to comprehend. Now you have this. When this happens, in a situation whereby you now have price pushed down, right? You don't take your sell yet, but you now understand that what? The highs, the uptrend has been broken. The uptrend has been broken. But what should you expect as a technical trader? You expect that what? This is now a sell impulse. Then this is your what? There would be a retracement. The retracement will definitely come back to what? To this level. Price will come back to this level. Then from this level is where you have another impulse. And once you have this, you confirm that what? You are now in a downtrend. So what sort of situations are we having here? This is a low point. Then what do you have? You have a lower low point. I won't confuse you, I know. Then this obviously would now be what? This is your high point. Then you have a lower high. So on the, what was it called? At the next retracement, you're expecting that price should retrace to this level. All right, price should retrace to this level. And what is it creating again? It's still a lower high. What does this mean? That is, this new high is lower than the previous high. This high is lower than the previous high. All right, this is a clear confirmation that what? Yes, sales are very valid now. Then you keep having what? Another one. If you have this again, what do you have? This is a lower high. You expect a retracement back to this level, on and on like that. And I'll show you. You're going to see that price is consistently always moving in these dimensions. There are no other alternative dimensions for price to move. Price is always and would always continue to move in this dimension. price would always continue to move in this dimension. And this, so if you have this sort of situation right over here on your left, this is an uptrend. You have the same sort of situation, this sort of situation here. This is your consolidation. And then to the far end on my right, you have this sort of movement. This is a downtrend. All right. Any question before I go over to the charts where I'm going to show any questions, please? If you have questions. If you have questions on YouTube, drop them on YouTube. If you have questions on the Zoom room, drop them over there. I'm waiting, guys. No questions. Okay, good. In the absence of any question, let me go over to a live chat and try to show what we've been talking about. Okay, does this mean resistance and impulse is opposites for uptrend and downtrend? Yes, yes. So when you're in an uptrend, your impulse is still going to be like let me say the longest kind of movement. On the other hand, in a downtrend also, your impulse is still going to be the longest movement, the longest, like the most conspicuous movement, basically. Those are your impulses. Then your retracements would be more like the shorter kind of movements. Let me go over and look out for. So let's analyze this together. Let's look at this level. We'll pick the market from this point. So let's look at things from. In fact, this point is. Okay, someone is asking if there's anything like overbought in an uptrend. I won't go by that principle. I think I get what you're trying to say. Price is overbought or oversold. I simply want to stick to my structure. When structure tells me, direction has changed, I want to just hold on to that. On the other hand, if structure doesn't say that, I want to focus on whatever structure is doing. So I don't try to say, okay, is it overbought or is it oversold? At what point is it going to start going back? No, except what I see by marking out my demand and supply levels. Okay, so let's use this. So this is point. Let's use this point from this point through to this point. What kind of movement can you obviously see in this market? Look at what price is doing. We had this, then we had this, we had this, then price did this, then back here, then we had this, sort of movement all the way here. You can see this. So you can see these levels. You can see what happened here. This price was coming all the way up from here. We had an uptrend till this point, but obviously price didn't create a higher high anymore. Okay, so that's why I want us to just focus on where it started creating these lows. So ideally, if I was trading this, what I would have done at a point was, when I saw that price got to this point, and it didn't create a new high, you'd have marked out the level. So if you had done this kind of markup, I'm just going to show you. So when price now, oh my God. So when price created this sell candle, you can see how strong it is. This strong sell candle off this price level, right, which is a resistance level or also a supply level. You can now start looking out for your sell opportunity, right? And then what would have happened? You can see price was selling, but it still had to retrace back to this level, which is this level. Price retraced back to this level, and you can see how important that level became all through. I'm sorry if my hands are not straight. Let me try and use a straight tool. Honestly, if you can understand the technical aspect of trading, so I'm using a straight tool now. You can see how price obviously came to respect that level. But what's going to be your focus every time you look at this retracement? For an example, you see the next impulse created a lower low. This is a low point. Price created a lower low. When price retraced, it retraced back to this level. But guess what? It didn't go above the level. Price pushed down. It didn't create a new low yet. This is a clear consolidation level. If you look at this, though it's quite short, that's why I said when price is consolidating, you focus on the momentum that led to that consolidation. So it would have been an opportunity again to take another sell. And eventually what happened? Price pushed this sell, created a lower low point again. What did price do? Price retraced, and it retraced back to this support level. And then it didn't create a lower low, but it's still a low, right? Same level with this. And then eventually price retraced, created a lower low again, up to this point, created another lower low. This is just telling you that, okay, because the sellers are the ones in charge, there will be buy opportunities, there will be buy momentums, but it can't actually do so much for price. It won't take price off the roof. Now, what happened here? Let's look to this side now. Let me zoom into the right. And always understand the chart is always like this. The movement is always there. It's always there. It's always there. All you need to do is to be able to spot them, be able to see them. All right. Look at this level. Now, ideally, when price created this level, you look at this level also. What I would have done, okay, of course, is a retracement level. And then you had this price created that retracement. You would have been, with the mind's eye that, okay, we're in a sell, you could have been, okay, expecting that price would get to this resistance level and continue selling. But what did price do here? You need to pay close attention. Look at what price did. Price pushed above this level. You see what price did here? Pushed above this level, created a what? A higher high. Now this particular high point has now become higher than the previous high. That's an indication to start telling you that, okay, the sellers are now getting exhausted because the buyers have overpowered them. You want to focus on what? Buying opportunities now. You had this retracement for price, right? You had this retracement for price. It's more like price coming back to retest this level. And then from there on, look at this excessive push. You had all this push. What did price do eventually? It still had to come back to do a retest. So eventually price had to still come back, mark this level out. You see how important it is. Eventually price still had to come back for this retest for the retest of this level. And then what was the next thing we experienced? We experienced another upward push. So price did what again? Of course, all these zigzags got to this level, which is this level. At this support level, what did price try to do? I mean, at this resistance level, price tried to push down, but because what? It's a buyer's market, that resistance level got broken. The level got broken, the retest, then we had this. And if you look critically at this level, no higher high was created, no lower low was created until price broke through this level. And this tells us, okay, an exhaustion of the buy momentum. You know, what happened here again? This, we had this level, then we had a lower low was created again. So let's move. Oh my god. I don't want it to, but obviously, let me take it all out. So now price has essentially on this time frame has shown us that okay, this is a low. You can see this is a low, and this is a lower low, and price is yet to create a high. What are you going to be expecting to do when price gets to the next important level? You don't want to do anything else but focus on an opportunity to sell. Look at this. So when price comes back to this point, let me draw it this way. When price gets back to this point where we would be expecting to take sales, and your anticipation will be that our price will create a lower low point. At least the new low should be lower than this low for us to confirm that what we are still in the sell market, we are still in the selling opportunity. Okay, did it get clearer now for those who had 2.5 initially? Did it get clearer for you? Let me know. Did it get clearer? Or who else? Do you have any question you want to ask? Any question? Okay, fine. In the absence of no question, should I wait a bit? Okay. Let's quickly talk about candlesticks and why they are very, very important and crucial to trading. Candlesticks are some people call them Japanese candlestick. It's just fine. I don't want to go into the history. You don't need all that. Nobody makes money with the historical knowledge, right? So, candlesticks are basically the way price is represented on the charts. Okay, there are three major ways that price could be represented, but candlesticks are like the best you can use. On trading view over here, you might have more than three ways, but the most common ones people use either bars. The bars, people use line charts also to tell you, okay, this is where price is and all of those things. And if you look critically at these lines, they are way, you can use them to easily understand market structure. If you are still struggling with understanding structure, they are way easier, like could help you to easily understand structure. And then you can even, if you based on this line now, you can see where the sell structure started from. This is a low, price created lower low here. You can see how price came to retest this level. See, based on this, then we'll have a lower low based on the lines. The line helps to see structure well sometimes, but right then, so your next expectation for price is that what price should come back and create a lower low. All right, but that said about lines, I don't use bars at all. I don't even this line. Maybe when I'm only trying to make illustrations, I prefer to draw my market structure by myself. Then let's stick to candles. So with candles, they either help you understand when there's a bullish activity in the market. That is, when we say bullish, we're also referring to buyers' activities, or bearish, then we're saying sellers' activity. So a candle, many of the chart analyzing platforms, be it your MT4, be it TradingView, give you an opportunity to be able to change the settings, the color to whatever you want. Okay, so I just always love to use blue and red. I use blue candles to interpret I use blue candles to explain or to the red one for the bear movement. Okay, sorry, I'm a little bit distracted right now. Okay, so on TradingView, you could just click on settings, and then you can be able to change the color to whatever you love, whatever you want it to be. Some people use green, but so you can see that's changed to green. But I think I'm in love with blue, so I always like to leave it that way. No hard and fast rule. The major thing is you just understanding the purpose of every candle that you are seeing. And then every candle you see is actually explaining a particular duration. You need to pay attention to this, please. Every candle you see illustrates for a particular duration. And that's based on the time frame that you set your chart to. For an example, right here, you can see all this timing. You have your 1 second, 5 seconds, 15 seconds, 30 seconds, 1 minute. But we are on what? Excuse me. We're on 1 day. What does this imply? Every candle you see here represents a day, 24-hour day of trading. Every candle you see here represents 24-hour day of trading. And then you can see if you're using TradingView, the countdown timer is automatic. So it's just there. So it's telling us that this particular candle that is still forming needs about 12 more hours to be able to close. Because why? you are on a daily time frame. So this candle, every candle you are seeing here, each of these candles here represents a day on this time frame. So this is a day, this is one day, this is a day, this is a day, this is a day. Now, understand this, please. If you are considering a candlestick like this, let's assume this is a candle, and then you have so this is a bear candle for an example. Understand this, because bear candles are telling you that our price is going down. So this is the lowest point price got to, or the lowest point for price. As you're looking at this candle now, this is the lowest point for price. This is the highest point, the peak for price. This particular place is the highest point price got to. This is where price opened. So at the beginning of the duration that this candle is speaking for, this is the opening price. This is the body of the candle. This is where price closed. That is, for the duration the candlestick is speaking for, this is where price closed. Let me take this over. Yes, there's a lot of information I'm dishing out. I know. I'm sure that with time you would be able to process them. So for an example, let me zoom in a little on this one. So this, using this candle now, this particular bearish candle, this is the highest point price got to. This is the lowest point price got to. This is where price closed. This is where price opened, this point. And this is the body of the candle. For a bullish candle, on the other hand, this is still the lowest point price got to. This is the highest point price got to in that particular duration that the candlestick speaks for. But this is where price opened. The difference is where it opens and where it closes. Because bullish candles are showing you that our price is going up, right? So they open at the base but close at the top, right? And the opening and closing of price is very, very, very important. Now, another thing you should understand is the higher the time frame, the more accurate the information you get from any chart. The more accurate the information your candlesticks are sharing, the more accurate the information they are giving to you. As a day trader, what should you do every time you open up your chart and you try to trade for the day? I do recommend that you come on your daily time frame. What do you do on your daily time frame? On your D1, you just mark out or have an overall perspective of what the market should do, right? What's the structure on the daily time frame? Then you go over to your H4 time frame. You go over to your H4 time frame. What do you do over there? That's where you begin to mark out your levels. If they are so significant on the D1, yes, you can mark them out. But on H4, when you mark out your levels on H4, it helps you a lot. You are getting it closer. You are bringing it closer into perspective, okay? The highest point for a blue candle, a bullish candle, is still the top, right? The peak point for price, the highest place price got to. So this is telling you that in the duration, in the 4 hours that this particular candle formed, this was the highest place price got to, but this was where price closed. This was where price opened, but this was the lowest point price got to. So I did a class a video where I tried to explain the 3 dimensions of candlesticks, and how you are able to understand their application. I want to believe I answered your question Joyce. There are 3 dimensions to look out for, like understanding the use case of candles other than just having the theoretical knowledge of candles. So I did a video on that. I'm going to drop the description. I don't want to go over it now, so it's going to take a lot of time, and it's needless because I already did something concrete on that. So I will just drop the link. The link will be attached in the description of this particular class also. Please and please, when you're watching on your own, you have the luxury of time, luxury of opportunity to take it back, rewind it, and then this will help you a lot more. All right. So if you know that your background noise is very, very okay, like very considerate, and you have something to say, I would love to hear from you. Dave, if your background noise is fine, can I go ahead and unmute you? If you've got some contributions, you have 1 or 2 things you want to talk about. Yes, I can go ahead and unmute you before I go into the last segment for today. I've not taken a trade today, so I want to analyze. You just watch me do it. I want to make one analysis at least. Then if we see a good opportunity to make entries, we make entries, and then just watch out for what happens to it. Are we good now? Anybody wants to say anything, just let me know. I will meet you so you can. In the absence of that, let me do a quick analysis for. I'll do for Euro JPY. I took this trade. I took a trade off here yesterday. So just see how I'm going to analyze, and then expect myself to make a trade decision. Since I'm aware that this buy I'm seeing here is a retracement, okay? This buy we're seeing is a retracement. We are expecting a sell push very soon. So let me mark out this level first on my daily time frame. I'm not going to force, you can't try to force the market whether it's going to buy or sell or do whatever it is it's going to do. You are only trying to take a position so you know what to do when the market gets to a certain. And it seems that that's where price is currently struggling. I'll mark it this way. You don't want to rush into a trade and then you just discover that your stop gets hit. And then, okay, let me use this. So this is a level. Price is yet to get to this level. And then this is another level, important level. So these 2 levels, I'm not going to rush in to take a trade right now, because what am I expecting? I'm expecting that at this level, price should continue to push down and come back here. I'm expecting that price should push down. It's just my expectation. So I'm not going, since I can't force it to happen, right? I'm only waiting for it to happen. This H4 candle is going to close in the next 18 minutes. That's another thing. I want to see where the body of this candle closes, all right? I'll be expecting that the body of this candle should close beneath this line that I've put up. And preferably if I can see it close in a bearish way, right? You can see price already rejecting, trying to push down. If I can see this candle close in a bearish way, what I'm going to do is I'm going to take a sell. Let me show you what the potential for the sell will look like. If the candle closes beneath this level and then maybe on H1 gives me a bearish, candle like it's doing, you can see what I'm saying now. It's already trying to create a bearish candle, but I want this bearish candle to close beneath this level. I want this bearish candle to close beneath this level, even though it's on H1 or whatever time frame it is. Once that happens, I'm going to take a sell. Where am I going to take the sell to? I'm taking the sell. The sell has a potential of getting to this line, but I may not be able to wait all that. I'm going to take the sell to this next level. This is the next level, and that's what 40 pips. It's a 40 pips direction. Where am I going to put my stop loss? I'm going to put my stop loss right above this level. All right, right above this other level, because price can oscillate, do the up and down movements. Eventually, where is price going to? That's the most important thing. So if I set the 23 pip stop loss and the trade is a 40 pips trade, that's like ratio 1:2. The risk to reward there is like 1:2. It's still a cool trade for me to take. Okay. On the other hand, I may go down to a lower time frame like my H1 and look at the structural level and see where to put my stop loss. Okay. Because see, this movement happening over here on H1, it's already, look at price did this, pushed up, but look at this strong bearish candle showing you something. It's telling you a story. And look at what happened next. Price, this candle couldn't close above. As a matter of fact, if you draw a level here right now, let me draw a level. And you can see what the whole level looks like. You're not trying to force the market to do a thing for you. No, you are simply looking at what is happening and you just want to leverage and make the most of whatever it is that the market is doing right now. So this is a level for me now. On the other hand, so if I take this trade and then I sell and then price pushes through, this is where we're expecting price to get to for our take profit. We're expecting that price is going to push through and get to this level. All right, so I'm expecting that price will push through and get to this level. That's like the 40 pips movement of the thing. So if I'm expecting that price will get to this level, what will happen if that doesn't happen? What can I do? It's not a hard thing. That means if it fails to sell, if price fails to sell, and then after entering the trade, my stop loss gets hit, the next opportunity, it should mean that what I'm expecting that price should come and give us a closure. Price should come and give us a closure above this level. If price can give us, breaks through, close above this level, comes back to retest it, then I can take a buy down till this point. This is my simple analysis, and I'm going to take this trade, right? I'll be looking out for the next few minutes, see how the performance of candles are. That's price action. Price action is actually, I'm not going to lie, it's not something you can actually learn in a day. You may be able to learn support and resistance and all of those things. That's why I think I dropped a link to a particular video for those in the Pips Mastery Academy. It's a very detailed price action teaching. More will still be dropped in that particular regard. It really helps. It helps in your ability to be able to understand where price will get to and what price is actually doing. So let me take another analysis, which would be Recommendations. What pair are you looking at? What pair should I look at? I want somebody to talk at this point. Just type it in the chat session. Tell me a pair or whatever you want me to look at. I need to take some water. I was like, okay, GBP USD. Okay, good. So let's look at this together. I've marked it out at a particular point in time. Okay, good. So let's look at this. All right, one thing I think I need to quickly say is this. For an example, if you look at GBP USD like we have here, if you're looking at GBP USD and you decide to take a buy on GBP USD, what you are simply saying is that you're expecting the price of GBP to go up, right? You're expecting GBP to go up and USD should be weak. I hope I made sense there. If you have GBP USD, all right, so there's a pair on your left, this to the left, this to the right. Every time you are taking a buy, you're expecting strength for the currency on the left. Every time you are taking a sell, you're expecting strength for the currency on the right. I omitted that. I didn't say it earlier. So if on the other example, you're looking at Euro JPY and you're selling Euro JPY, what are you saying? You're expecting JPY to be stronger than Euro, So having that understanding in mind. So look at this now. Structurally, we're on the D1 time frame, right? And it's obvious. What structure can you see? What structure can you see? You have this level. What structure can you see? So plain to see. Right? Price has created a new high. How do I anticipate where price is going to right now for GBP USD? Still the same principle. You mark out this level, the next level above where price is now. So this is where, that's why I keep saying that you need history. History will tell you what has happened before because we're expecting it to happen again. And it will definitely happen again. So at this level, when price gets to this resistance level, we're either expecting that price will break above this level. If it breaks, does this, it will create a new high, right? And then how would you find that level? A minute. I'm still going to break it, I'm going to lower time frames now. So if you're looking out to make a trade for the day, I'm going to drop a bias, what I think price should do in a minute. So, and you can see how important where price is now, where price is heading to. See, this is not rocket science. This is simple. You can see how important that level is. Let me put an horizontal line there. You can see this is a very strong level for GU. It's a strong level because every time price gets this level, look at what happened. Keeps coming back down. Every time price gets to this level, it's coming back down. Price got there, bam. Price is now there again. Of course, we're not saying that, oh, definitely you are going to be so ego strong and say, it's coming back down. But you can begin to anticipate and say, oh, very likely, more probable is that what? It will repeat itself to come back down, right? On the other hand, if it doesn't come down, you would expect that price pushes up, comes back to create, then this level will now become what? The new support level or the new demand level, and then you can keep taking your buys. Where would you take your buys to next? Still the same principle. You may need to watch this video over again, if you don't get it right now. You have to take the buys to this level next. If that level breaks and price pushes above, where will be the next level for price? To be here. All right. So this is the dimension. The market would either do this, come all this way, then do this, right? Or the market should do what? Come back down and then keep creating lows all the way. So now, let me not bore you. Let's look at it today and say, okay, what position can I begin to look out for? All right. So ideally, with this candle happening at a very strong level of price, it's already beginning to look like, okay, there's, very likely price is already rejecting that level. Okay. Looking like price is already rejecting that level. You want to mark and say, okay, so where am I selling to if I'm taking a sell? This is the next point you are trying to sell to if you're taking a sell over here. All right, so it looks more like it. You still won't jump in. You need to wait for price to show you. This candle is closing in about 5 minutes. If it closes bearish, what can you do? If it closes bearish, you can put a level here. You take your sell. That looks like a trade with how many pips potential? Just saying. If you sell to this level, that's about 50 pips, all right? If you sell to this particular level, that's about 70 pips. There's a lot of movement to catch in here. Where would you put your stop loss? If you are conservative enough, you can put your stop loss right above this candle, maybe about 10 pips after this candle. Put your stop loss here. On the other hand, you could put, if you are using a very, very low lot size and your account can take it, you could put your stop loss maybe above this level. Then you set your take profits for this level. This would be a way to look at GU today. One thing you should always do, be patient. Let the candle close. All right. Let the candle close. Be very, very patient. In fact, when the candle closes and you see that it's already way too deep into, and then the risk for your stop loss is already too high, you wait for the next opportunity. All right. You wait for the next opportunity. But very likely, even if this candle closes here, you may still have another candle that will push price up at least to some considerable levels, and then you can still make an entry at that point and then expect that the TP should come through. All right, so since I said everyone should, you already, from yesterday, you should already have your demo account at the minimum, have your demo account running. So I'm expecting that you use the knowledge of what we've shared today. It's been amazing, nearly an hour, 30 minutes of this, very deep learnings. I'm not going to lie to you, you already know. I'm sure you can feel the weight of the content I'm dropping right here. So if it was something paid for, it will really, really cost you a whole lot. But right here, you're having, this amazing piece of information and it's coming for free, I would only be glad if you make the most of it. Honestly, that would be the greatest joy that I would have, that you make the most of it. There's no magic to trading forex or trading any financial market. It's all about what? Learning and doing, learning and doing, learning and doing, learning and doing. You can only get better as you continue to do. I saw something this morning and it strikes me very, very well. It says consistency is better than waiting for perfection. Okay, so don't wait and say, oh, next month I'll start trading demo, January or February. No, start doing it now. Do it every day. You have 5 trading days in every week. Okay. If you want to trade just 2 of those days, make up your mind and be consistent about it. If you want to trade every day of the week, make up your mind, be consistent about it. Okay. Because that's where the difference will come eventually. It's easier for me to look at charts today, because I've been doing this every day, every weekday. As a matter of fact, I look at the chart almost every day of the week. So spending so much time looking at the charts, it will increase your level of confidence. You will be able to understand the psychology of the market. And when you start trading a live account, it won't be so much of a problem for you. All right. So on this note, I want to sign out for today. I will try and leave this. Let me save this chart so that tomorrow we can come back to look at it and see how far it played based on our expectations. Okay. Then the Euro JPY also. I'm still waiting for this one. Very likely I'll be taking a trade off here. But I'll wait for this candle to close. Then I'll wait for a bearish confirmation. I'll wait for a bearish price action confirmation before taking this trade. So from me to you guys, it's been an amazing pleasure. It's been, an amazing morning. I really don't even want you guys to go, right? But man, we got to go. We got to go. See you tomorrow, everyone, and share the links to the videos with your friends. I'm sure it will be beneficial to somebody out there. Enjoy the rest of the day.